Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, everybody, it's Wednesday. Welcome, everyone, to the Wednesday edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day as we are getting rolling on the day before Thanksgiving. I know that we've been out for the last couple of days at the DMC. Yesterday was a live trading room, so I was in there with some of the TradersArmy.com subscribers, and then Monday was a travel day. I was on a red eye and didn't get home in time to do this before the market opened up. So let's go ahead and dive right in. Now, the last 2 days, we had some really strong bearish price action. And that bearish price action that we had the last couple of days was frankly not a surprise, right? I actually didn't think we'd have too much movement this week. But looking at it on Sunday night, I kind of felt like we might just chop around a little bit. But we had a very, very strong move down. And now we're getting a little bit of a rally. Here's my belief on pretty much any rally. At this point, you've got to treat any rally as a short covering rally. Any rally right now to me is a short covering rally, and it's an opportunity to get short. That's all I'm looking for at this point. It's my 4-hour chart is clearly lower swing lows and lower swing highs. We've had the last couple of hours of stronger moves higher, but I think that just takes us up to the area where there's better opportunity for reversals. And in our live trading room yesterday, we talked about some potential reversal areas here on the 15-minute chart. Unfortunately, we were unable to get back up to them as we had a huge sell-off again yesterday. Yesterday was a stronger sell-off day than the day prior. And in my mind, it sets up opportunities to go short. Now, I think that today we may have a little bit of a move higher, but I'm kind of treating today like I would a Friday, where we have sell-off oftentimes near the end of the day. And so if we rally back up into this region, I'm going to be very, very interested to see what happens. Right now, this region is Globex, and so it's slightly lower probability on the move, and we came close to it once before. So this could be a region where price just almost gets back into here, and this is going to act as a ceiling where we would expect price to hit and reverse and kind of come back down. Because we've already come close to it without getting into it, and it's a Globex session, what I'm going to do is I'm going to switch this to a confirmation style entry because it is a slightly lower probability area for us to look into. Next level would be our level in the Nasdaq. So in the Nasdaq, the level that I just identified in the S&P is not quite as clean. It's somewhere up in here. That level that I identified in the S&P is not quite as clean. It's somewhere up in here, a bit higher. But that level, we've not yet traded into it. And so I'm going to leave that one be. Since I've got it in the S&P, I'm going to leave it be in the Nasdaq. I don't necessarily think I need to trade both. There is some demand down here in the Nasdaq, and that's really coming from the 4-hour chart. Now, these would be our lows earlier in the year. If I go to a daily, that would be those lower wicks. It's not quite the February lows, but just about. I think there's a good chance that we will retest those February lows before the year is out. I really had a overall bullish sentiment for the year. I thought we would end the year higher, but it looks like that may not be what happens. All right, crude oil. So here's where I think we can see some movement today. So in crude, we're up a full $1. However, crude is another one that you've just got to kind of treat every rally as an opportunity to get short, right? Crude is, you got to treat every rally as an opportunity to get short. And right now, based on this basing here, I would be okay if somebody took a breakdown out of this level. And the breakdown out of this level would be below this 53.92 area. So if you see, this, and right now it's worth giving a shot simply because your stop is going to be way up here. So it's a fairly wide stop based on your risk tolerance. If that's, by the way, if that's too wide for you, if you think, okay, that's too wide, I don't want to get in on that, I'm not comfortable with that much risk, instead of doing the CL, you can do the QM, right? So doing the QM, it's still the crude oil futures market. You're just doing a smaller contract size, right? This is the mini version of the CL. By doing the QM, you can still practice, take advantage of the price movement, but lower your overall exposure. Okay? All right, next, gold. Looking at gold. So in gold, we still have this area here is a potential reversal. We've put that as a confirmation style entry because price has come close to it in the past. It's the origin of a decent little move up. But we're in between two major areas in gold. I don't see gold really breaking outside of those two areas anytime soon. It might, but I'm going to leave this thing be as it currently stands. I'm not going to add any levels to gold as this is kind of chopping along sideways. Let's talk bonds. So in the bond markets, we had a breakdown set up because of this rising wedge pattern. So this rising wedge pattern is typically a bearish trade setup. And our breakdown was below this area here. And so we got a little bit of a breakdown off of the rising wedge pattern. And now we're getting to the point where we would see another reversal. So if you are already short this from our trading room, then you can stay short. If you're not short it yet, I would say that you could go on a candle-to-candle style from this area and get short once we get a candle that gives me a lower low. This looks like a retrace of this last move down, and this was our support, which should become new resistance, right? Old floor would become the new ceiling. Next, the Aussie. So in the Aussie, we have a confirmation style long setup down here. Let me remove some of these lines here. And price is starting to rally up out of that level near target 1 and target 2. Our next opportunity in this, though, would be to short something somewhere up in this region. I think like, we've got on a 4-hour time period, the Aussie technically is going basically sideways. So I think that if we've got kind of a weak move out of this level here, I think our next level would be to short it somewhere off of this area up here, but none of that's clean price action, so it might be better just to hold off and wait. In the euro, for those of you that have held on, we have rallied off of our big picture time frame very nicely off of that big picture time frame. I'm not sure how many of you that watch this thing every day have got that and held on, but it's a really nice move. And now we talked about, okay, time to take some profits off of that level, but this is our next reversal period. Now we came close to it in the overnight session, but we're unable to get filled. So now I convert this to a confirmation style entry because we came close and did not get into the position, but it is still valid. Canadian dollar, I had set up a confirmation style long in the Canadian. And in the overnight hours, we saw price come down and we came into the level and blew right through it. This is why we use confirmation style entries. Now, if you notice, we did a one quick touch on the 1-hour chart, a one quick touch, and then popped out of it. But that wasn't enough to get us in the trade. So there's no money to be made in this because the very next trade we came down, and the idea is this activates it when we get halfway in, but then when we go through it, that activation is negated because we cancel. There's no entry on the trade because we go below the stop before the entry would come. Now, so this level would no longer be valid and should come completely off of the charts. Next, as I take a look at what I'm looking for in my next opportunity, if you notice, we've got a bunch of supply above us, but no real demand below us, which definitely makes me more of a seller than it does a buyer. So I've got to actually move out to the daily chart. There's a chance that we could get a pretty strong breakdown lower than where we are, and that there's some weakness that could come in the Canadian. Last, certainly not least, Great British Pound, Japanese yen. So in the Great British Pound, we have a little bit of sideways price action after this parabolic move down, coming to an area where we could see a potential breakdown below this 27.03. We're just not quite there yet. And then also in the Japanese yen, we are coming close to a potential entry. However, we came close to it, and now we're chopping sideways. So this Japanese yen level is also one that I'm going to switch to a confirmation style entry. Remember that I would anticipate fairly low volume today, just heading into the U.S.'s Thanksgiving holiday. And the market's closed on Thursday and only open half a day Friday. So could be a good opportunity to sell some options in order to generate some premium over that period of time. If you don't know how to sell options, go to tradersarmy.com. There's some options lessons there for you. We'd love to have you join us and become a subscriber so you can get a little bit of insight into the options classes that we have available. So hope everybody has a great Thanksgiving holiday. We will have no daily market commentary tomorrow, but we will be back on Friday morning setting up for the weekend. Until next time, everybody, have a great day, and I will see you soon.